What's going on, everyone? We have a filing to talk about out of the NYSE National Exchange. This is a notice of filing of proposed rule change to modify Rule 7.31 to add subparagraph F4 regarding directed orders. Now, I know a lot of you are used to using directed orders to skip around PFOF, so let's go ahead and take a look at this. So the purpose of this one, the exchange proposes to modify Rule 7.31, which is orders and modifiers, to add new subparagraph F4 to provide for directed orders and to make other conforming changes to its rules in connection with the addition of this new order type on the exchange. The directed order, as further defined below, would be an order sent to the exchange to be routed directly to an alternative trading system, otherwise known as ATS, that is going to be specified by an ETP holder, which is an exchange traded permit holder. So the exchange proposes to add Rule 7.31 F4, which again would define a directed order as a limit order with instructions to route on arrival at its limit price to a specified ATS with which the exchange maintains an electronic linkage. Directed orders would be available for all securities eligible to trade on the exchange and would not be assigned a working time or interact with interest on the exchange book. The exchange also proposes to provide in Rule 7.31 F4 that the alternative trading system to which a directed order is routed would be responsible for validating whether the order is eligible to be accepted, and if such ATS determines to reject the order, that order would be canceled. So if they decide to reject it, the order is going to be canceled. So I don't get the point of this. Now, this would further provide that a directed order must be designated with a time in force modifier of immediate or cancel or day, and would be routed to the specific ATS with such modifier. The exchange proposes that a directed order designated immediate or cancel would be traded in whole or in part on the ATS to which it is routed after receipt of the order, and any untraded quantity would be canceled. The exchange proposes that a directed order designated day would expire at the end of the core trading session on the day it is entered. This proposed rule would also provide that a directed order may not be designated with any other modifiers defined in Rule 7.31. It would also provide that during a trading halt, an incoming directed order would be rejected. The exchange also proposes a conforming change to this rule called pre-trade risk controls. Basically, they're going to be modifying this rule that basically sets forth the definition of gross credit risk limit, and currently provides that unexecuted orders in the exchange book, orders routed on arrival, and executed orders are included for purposes of calculating this credit risk limit. Now, the exchange proposes to modify this rule to specify that orders routed on arrival would also be included for purposes of the gross credit risk limit calculation. So now directed orders are going to be calculated into the gross credit risk limit. That's amazing. Now, because of the new technology changes, the implementation of this is not going to be ready until the second quarter of 2022, which we're in right now. So a couple of months, this will be announced by Trader Update when they're planning on implementing this. So this is likely a backstop for retail orders because the NYSE National is a very small exchange, so we'll have to see what comes of this. Anyways, directed orders, they're starting to get them on more exchanges.